Index trading strategy, guys. I'm glad that you are actually now on model 3, the third video in model 3, which is going to allow you to be able to get the index trading strategy. Obviously, there's a few models that you did cover. We spoke to you about understanding how the index market works. Not only that, but also the calculation of pips and all those things. I want to show you guys that once you are able to compound these things, you already have a very powerful strategy. But the most important thing is for us to be able to mix these things together, just so you form something for yourself. Because remember, trading is something that is personal. It's all in the mind, guys. So once you are able to implement what you see and visualize in the mind, then you'll be able to cover these things. And also remember that we've got support whatever that you're going through about your mentorship, your membership. Just mention or go to support and see if they can help you out with whatever. So you can see the topics that we are going to be covering on this specific topic. Now, I'm excited to actually be the one that's breaking down the strategy to you, how you are going to be able to apply it. Not only that, how you are going to be able to find success trading the index market. Because yes, we've been trading the forex market for over 4 years now, but the index market is actually something that's that's a lot of growth that you can actually expect from your side when it comes to the financial markets. So we're going to be speaking about mastering indices, how you can master index, how you can be one of an expert when it comes to indices. We're also going to be speaking about mastering calculations. So now I understand that yes, Tramaine and also Fenza and Fanny like I did speak to you guys about these things, but now I want us to just, even if I spend like a minute or 2 minutes on the very, very important things that I believe you need to understand. We're also going to be speaking about mastering multi-time frame analysis. So this is something that's very important, because once you see the bigger picture, you can break it down and be able to capitalize those smaller moves according to the bigger picture. So I want us to speak about how you can master that. Also, mastering trend line usage. It's important to understand on how these trend lines work, how you apply them. Already, I know that you're already you've got a lot of knowledge from the previous models, the previous lessons on how to draw trend lines and stuff. So now we are just going to be looking at how you can be one of an expert. We're also going to be speaking about mastering support, resistance. I'm going to show you guys how I get to draw my support, my resistance, how I'm able to actually predict more future support and resistances using this specific strategy. So that's something we're going to be speaking about. We are going to be speaking about. We are also going to be speaking about mastering candlesticks. So now these things are things that, yes, I know that you obviously do know them from before. If you feel like, if you don't know them and you're like, I'm stuck, I don't know what he's talking about, obviously you have to go back to the previous models, guys, because I'm not going to tell you guys the basics of it. I'm going to tell you guys the mastering of it, how that 1 minute information that's going to literally just 10 times what you already know about it. So it's very important of you to already know these things, so that when you do jump into the strategy, when I break down the strategy to you guys, you're able to see on, okay, oh yeah, this actually, I spoke about this makes sense here, 1 2 3 1 2 3. So now let us get on to it, guys. Let's get to it, and we'll start off first with the very first topic, which is mastering indices. Okay, so now guys, let us speak first about mastering indices. The most important thing is to understand, then to build from the knowledge, and then you become a master. So one that's a master is one that practices multiple times. Just because you're watching this, you went through this, doesn't mean that you're already a master. You have to literally go through this more than 3 times, just so you're able to get that information stuck in you. And then you have to apply this information, just so you are now able to literally see the mistakes, the do's and don'ts, all those things. So you have to practice. Repetition is what builds you into mastery. But now let's speak about master indices. So now we do know that we have technical, fundamental sides. Technical obviously is when you follow charts. Fundamentals when you are following news. So those are the 2 differences. Now these 2 are going to now be put into action. So remember, we did speak up, you know how to technically analyze the markets from the currency side. You do know all of that. I don't have to show you all those things, all those complicated. You do know all of that. So now the fundamental side is also something that's going to play a part on us, because remember, when it comes to indices, we focus on US30 and Nasdaq. We focus on US30 and Nasdaq because you can go out there, backtest your own different types of indices, see which one works for you. The reason we focus on this is because now I did backtest, US30, I did backtest Nasdaq, I backtested even more than only these 2, and then I saw here is what I should focus on. Even now I'm now more focused on US30. That's how niched I am. I zoned in and I narrowed my focus. Ne? So now we focus on these two. So now what actually is Nasdaq? What is US30? What companies are constantly being in here? If it's 100 companies, are those 100 companies consistently in Nasdaq? If not, then what actually happens? What pushes one company out and what makes the other company come in? So you have to now focus on such information, gather as much information as you can on Nasdaq or US30. So I want to speak about this one since it's the ones that we are focusing on. But now, when it comes to the technical side, yes, you have to already have the technical view of, or the technical perspective of seeing what the market is saying, meaning that you have to start analyzing, see, okay, no, that's actually what the charts are saying, listen or let the markets show you from their own technical side of things. And then afterwards, you have to jump onto the fundamental side. Look at, I've got the app thing is we're using the phone, but I was going to show you the app that I use is actually Bloomberg. I'm not very well, I wouldn't say I'm a master when it comes to news, but I know what's happening with news. I know when they're saying the stocks have risen. It's actually going to bring me to the next one. When the stocks have risen, when the stocks dropped, all those things. Like, I've got information on what actually is going on. So I'm now able to interpret that, okay, my technical side of things is saying this. Fundamentally, it's also saying this, which means that is this actually a long-term trade or is it a short-term trade? What actually should I be able to make off of this? So these are things that you need to be able to put them as one and then move forward with it. Don't try to separate this and say, no, I'm only going to look at this and not this. Remember that when it comes to indices, guys, it's very important that you actually merge the two so you come up with one different strategy, which I'll be showing you guys a strategy at the end when we dive onto the computer. I don't want to waste a lot of time talking about the theory side of it. So now stocks. Bringing me on the stocks. So remember now, all these companies, they do have stocks. They have like different types of companies. It's not only one thing. It's different types of stuff that makes up one thing. So now you have to be one that actually follows those stocks. Now you have to be one that actually sees what's actually happening with those companies that are being involved. So now you have to do your own research. But now when you're speaking about this, there's only like, it could be top 5. Let's say what could happen is that the top 5 stocks that would be, let's say in US30 for instance, top 5 stocks that would be in US30 could be one of those biggest stocks that actually move US30. Find out that the top 3 even that are in US30 are the ones that move it. So imagine what would happen if you know that the top 3 stocks of US30 are actually all going to the upside. What would happen? I believe that you are also going to be able to know that, okay, no, US30, there's a higher chance of me buying US30 because the biggest companies that affect or influence US30 are the ones that are actually now going to the upside. And how do you know that? Obviously, you need to understand what the companies are doing. You need to know what the finances of the companies are. You need to know if a company made money, if the company lost money, if a company is launching a new product. You need to know what companies are actually investing in. You need to know what actually is going on with those specific companies, because once you master, once you understand what's going on, once you follow these people that are the biggest influence, like your Jeff Bezos, your Elon Musk, once you follow these guys and you are like, you build a strong, close relationship with them, you'd be able to know that, oh, okay, this is more likely to happen, this is more likely to happen, this is more likely to happen. So these are things that you have to focus on. So now, remember, the purpose of me telling you about this is now, I want us to focus on narrowing down everything that you know, unlearning, so that we can relearn some of these things, just so when we get into the charts and we start speaking about, the strategy, showing you guys all the things that I'm seeing, you need to know that, okay, no, before this actually happens, I need to master, know this, put all these things into one thing. So remember, guys, if you're not going out there to get, because remember, these are it's a fluctuating, something like that, and it's not always standing still. So I mean that even if I say this Facebook now did these are things that are moving up, it's no longer going to be like that, like when you watch this video now. So you have to know at the specific time when you're watching this, you can even play around with it. Watch this video maybe 3 times, play around with it. Now when you're watching this, find information about Facebook, find news, see how it affects, and then the next time when you watch this, after 2 days, come back, find information about Facebook, come back and watch the news, do your technical analysis to also with fundamentals and all those things. So now you need to know the stocks that actually do affect this, and you need to follow those stocks like you are like this with them. I promise, like once I started putting all these things into action and I started following like this, it was almost like, I increased like my win rate by 2 to 5%, which is a lot to think of it. Commitment. Now it's very important that when it comes to mastering indices, you need commitment. Now commitment doesn't mean like you have to commit to learning. No, those are things that you know. As I know that you know these things. I don't want to tell you that you have to commit that you're learning. You need to be committed to your ideas, meaning that if technically you are seeing a bias, technically seeing bias, fundamentally all these things that add up, they're telling you about the bias. The stocks that you spoke about, that you read about, everything that you are seeing on the charts, speaking about bias. Now you need committed. Committed means that you are only looking for buys. Remember that on the previous lessons, I told you that if the bigger time frame is saying buy, you go down to the smaller time frame and then you start looking for buy. That's commitment. You're being commitment to your buyers, you're being commitment to your momentum. So now this, for us to start mastering indices, for us to know the momentum, technicals won't just give us momentum. It won't just tell us that it's like this. You need all these things, guys, in order for you to know where the momentum is going. Then you need to be committed to that. When you're buying, you need to just look for buys. Even if you're seeing a short-term sell, let it drop and buy. When you're seeing sells, take them as a retracement and then just continue buying. When you're seeing buy sells, when your commitment is saying we're going to the downside, and there's a commitment, there's what you call commitment of traders and stuff. Those are commitments. When it's saying that you're going down, your momentum and stuff, it's saying that now you're dropping to the downside. Whatever that you're seeing in your head, you should just start thinking sellers. When it's on resistance, you sell, it's selling. When it's doing the same, it's selling. You need to be committed to your trades. So now let us move on to the second topic, so I don't waste too much time on the first one. Remember, it's all about mastering indices. It's not a personal journey. It's not a journey whereby you have to. This is actually what showed me that you're one of those committed traders, because you have to literally the learning doesn't end here. For me also, I'm not done learning. I'm still watching YouTube videos. I'm still taking courses, learning, trying to get more information. The learning doesn't end here. You have to go out there, get information. Especially with mastering indices, you have to go out there and literally just continuously getting new information in order to know whether you are buying or selling, because that's just how it is. You have to know information to know when you're buying and selling. So let's move on to the second. Okay, so now we are speaking about mastering calculations. So remember, we did speak about indices, spoke about how mastering indices, which is very important to understand how these things actually do work out. So now we're speaking about mastering calculations, so you are able to see the two differences of what you can make of calculations, but also we will be able to fit in the multi-time frame analysis too on this specific slide. So what I'm trying to say here is that let's take a look at lot sizes. Yes, I know that Tremaine did mention to you guys about lot sizes. Okay, so now looking at the lot sizes, there's different types of brokers, and there's also different types of lot sizes. If you see it in a way, let's say on a mere example, on FX Pro or IC Markets, it's one of the brokers that we recommend. IC Markets, Nasdaq minimum lot size would be 1 lot. But on Veracity, minimum lot size would be 0.01. Understand? So those are two different types of lot sizes. At the same time, it could be the same type of value. It could be the same type of lot size, but it's just like that one there is a bit more huge, that one there is a bit more smaller. So you need to be able to decide what brokers that you are using, like the ones that we do have in the recommended broker section. So you are able to see also the account size, because leveraged won't agree to some of the brokers that you would have chosen and stuff. But let's say now, for instance, you are looking at obviously the lot size and you are 0.01. But at 0.01, it's a bit more different when it comes to the pip value of that specific broker, because let's say now with indices, when you have to master them, you have to know the two differences. That obviously with what's the other one with currencies, it's 100,000 pips, let's say 1,000 pips or 100 pips. I can even say 100 pips is equals to 100 points or 10 points. So with the 10-point move, with the 10-point move, literally it's 100 pips. That's the two differences. That's all you already are supposed to know. If you don't know, if you're like, wow, is it for real? You shouldn't be doing that, because you're supposed to know this for real. But once you've got this, yes, mixing it with 0.01 lot sizes, for instance, this one is the most basic, because it's even simpler to do calculations with it. we are able to simply see that, okay, no, the two differences now, it's no longer the same when it comes to like us being able to master how we calculate our things, our market, like trends, like whether you're buying or selling and stuff. But now the range is also something that's a bit more important, because once you understand the range that you're in, so now range doesn't really mean that ranging market, whether you are buying, whether it doesn't mean that. It means like literally your trading field, like the area that you are able to trade in. Meaning that if you are buying, your field of buying, because you can't try to hold, let's say looking at pips, you can try to hold 10,000 pips in just using a 1 minute time frame. That won't work out. You have to obviously have a specific range. Time frames also move with their own ranges, so you need to be able to see, okay, you'll be executing maybe at 5 minutes. If you execute at 5 minutes, then your range would be within these areas. So those are things that you need to look at. Once you master the losses that you'll be able to use, also the pip value, meaning that each and every one pip, each and every 1 point that's being moved, how much is it actually costing you? You need to know that. And once you also look at the range of that specific thing, that's actually a powerful thing, because I'll be showing you guys everything here on the chat, because we also have this beautiful tool that's actually about the ranging markets. That's on the TradingView platform. I'll show you guys how I'm able to calculate once I've spotted my interest and stuff. That's when once you see your executions, you execute. It's like it's on autopilot. It's autopilot. So yes, speaking about that, now looking at the multi-time frame analysis, like this actually does bring me to understanding the whole factor of range. You can hold, you can scalp, you can do all these things. It's all up to multi-time frame analysis. Now the way that we actually analyze the markets is this. We look at, obviously, when it comes to indices, we look at the 4-hour time frame. But now the difference could be this: you either swing it or you scalp it. We chose to day trade it. We're not swinging it, we're not scalping, we're day trading it. So 4-hour, we look forward, obviously, what your candlesticks are saying on the 4-hour, whether the momentum is going up, it's going down, and all this is like our technical momentum. Technical, remember on the previous slide where we spoke about the mastering indices, where you have to look at the two differences, the technical and also the fundamentals, merge it together. So now we're focusing on the technical. 4-hour, yes, you look at what actually is going on the 4-hour side of things. Okay, technically we can see that candlesticks are just there's a lot of momentum to the upside, or maybe tested support, it rejected, this is actually happening, 1 2 3, you get your bias, and then you're able to see. Also on the fundamental side of things, you need to understand on what actually is going on. Like on the 4-hour side, you need to look at what actually is going to be going on for the next 4 hours, because some news are like literally temporary. Like it's like now when the market opens, boom, it happened, it's done. But there's also other news that could be like long term. This is what we are seeing. This is actually going on with the specific stock, company, whatever. Remember we spoke about it. Yeah? Okay, so 1 hour is a bit more, it's nice, because it's I would say it's like one of those high quality time frames. With 1 hour you can never go wrong. So normally, let's see if this one here is just like on this one here, price is just descending. We are on descending, and now our descending is like the third, it's approaching third touches here. On the 1 hour, normally one thing that we would get is we want to look for support. Remember, this is descending, but it doesn't mean that it's good for you to buy. Just because it's descending, it can still continue selling, because it's going down. But once you find a support area on the 1 hour chart, then that's something that actually does make sense. And that support area should also come with a rejection. Doesn't have to be a hammer or anything like that, but should come with a rejection, meaning that even if price just goes down, then it rejects, even if it's just like a huge candle or anything like that, we need a rejection on the 1 hour chart. Remember, our 4 hour, we are seeing momentum, we're seeing everything. Okay, we see that, okay, we want to go up. 1 hour here, we are looking for our rejections and also support area. So now normally on the 15-minute, let me remove this here. On the 15-minute, we look at the ranges. Ranges meaning that now, obviously, maybe if price is coming from downwards, like let's say on the 4 hour, how you saw, and it's just playing a bit more like this, a bit more like this. Obviously, now we need to start looking at different types of stuff. What is price doing when it gets here? What is it doing? So now this is actually going to be you'll be able to catch those moves on the 4 hour, but using these time frames. Are we building a double bottom? Okay, yes, go up, don't take it yet, go up, maybe price goes up, breaks out of here. Now we are looking at price turning our previous support into resistance. We're looking at if price is giving us inverse head and shoulder. Look at what is the change like, even if like it's not like, you know, descending type, it's just price trying to continue to the upside. Start looking for on the 15 minutes. 15 minutes is actually a reliable time frame that you can you know, whether you're executing or you can take a message from the market from there. 1 hour is a high quality one, 15 minutes is a reliable one. 5 minutes is where we're going to be executing. So here you'll be looking for double bottom. Yes, I've got it. If not, price went down, it couldn't break the low, it broke the high, lower high, it came back, it's now forming a new higher low. When it broke the previous higher high, perfect, we got it. You understand? So now these are things that you need to start taking down. And then now on the 5 minute, it's much more interesting, because on the 5 minute, that's when we're going to be executing. So now our execution on the 5 minute is actually going to allow us to see, let's say now we found our double bottom, we found our higher high, higher low, price broke higher high, now looking for support. Obviously on the executing, we're trying to make sure that our points, remember it's all about mastering calculations, we're trying to make sure that our points are not too big, because if you buy here and your stop loss is here, there's going to be a lot of points, guys. It's going to be a lot of points and you're going to like miss out a lot of money. But when you're seeing that on the 5 minute price is maybe somewhere here, you've got your full confirmations from the bigger time frame, 1 hour, 15 minute and 5 minutes. You've got all these confirmations also on the fundamental side of it. But now on the 5 minute is when you are going to be executing. Now execution is actually going to make our stops be a bit more small, which we are also going to be speaking about trade management, which is something interesting. So this is actually the theory side of you trying to see what actually is going on. I want us to jump on the charts, but not now. I want us to just finish some of the last theory side of things, then we jump on the charts. So I'll show you guys how important these things are. Not only that, but I'll show you guys the strategy that's actually going to be able to help you grow when it comes to, you know, I know it's a bit more different, even for me it's different having to explain it right in form and showing it, but I know once I start showing you guys, we're gonna like take a look at different types of examples, maybe 3 to 5 examples of it, but maybe we can even take like, you know, a trade from backtesting type of view and let's move forward with it, so you're able to see how these things take down. But not only that, also these live sessions that we take each and every day, those are actually there to help you each and every day master how we see the index market. The live session, it's important of you to, even when you're done watching all the materials, all the lessons, just watching this, it's not gonna put you way too ahead. I promise, it's not gonna put you way too ahead. What's gonna put you ahead is showing up at these live sessions each and every day. So those are things that we are gonna be touching on next. So let us move on to the next one. Okay guys, so now let us touch once more on these few topics that are going to allow us to be able to master the whole psychology or the whole mindset behind, you know, the trading, actually the index side of trading. Because looking at it, guys, like, to be honest, some of these things that we're speaking about here, yes, it's the theory side of it. See, I'm in front of a whiteboard and everything, but once you start getting to, you know, the charts, it's going to be a bit more too detailed. It's going to be a bit, because now we'll be speaking with something that we're seeing. I'll be showing you what this candlestick means. I'll be showing you what this line means. I'll be showing you what this actually happened, what influenced this, what done this. So now I need you to actually master some of the things. So when we speak about that, don't rush to get the strategy and, you know, it doesn't make sense when you rush to get the strategy, guys. A lot of people are rushing to do that, which does not help. You won't get far. You're gonna watch, be done, and think that you didn't gain anything from the course, because you rush to get the study. That's just how it is. I once was involved in a course that I rushed to get the study. I didn't make it too far, but I changed. So I need you guys to change too. So mastering trend line. So one thing that we're going to be doing, we are also going to be applying. All these things are things that we're going to be applying. So it's like strategy, like all the things we are, like from 1, 2, 3, 4, 5, 6, we are now applying. We applied how you're gonna merge the two with fundamental stocks, 1, 2, 3. We applied how you're gonna be measuring the range, you know, lot size, peak value. We applied how you're gonna be what was the other one? I forgot. We applied we are applying all these things. This is part of the strategy you are now applying. So the strategy is all the way from the very first, you know, mastering indices. Every step that I gave you, that's the start of the strategy. Né? So now 90% rule, Fed touch. Okay. So now this looking at the trend lines. So Now with the 90% rule, you do know that obviously, like with any trend line, whatever that breaks out of the trend line, it has to go all the way down to the starting point. So now let's say if it's something like boom, 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 boom. You've got your beautiful trend line like this going down here. Obviously, we mean that it has to come down here. So this is like what our support area. Ne? How it gets here, we shall talk. What happens? But this is how we spoke about it, man. So this is something that you have to make sure that you understand. If you don't know this, go back, start the videos from the very beginning, because this is something that you need to know and master. And already with the third touch, spoke about this. So obviously first, second, our third touch is here. You need the first touch and the second touch in order to know when the third touch is coming. So this is actually going to be our third touch, né? So this, if you don't know this, guys, go back, but you need to understand what actually happens when price gets here. So now these two things are very important, because you'll see how I'm going to apply them. You'll see how I'm going to take these two things and put them into one and be able to, you know, develop a very powerful strategy. But not only that, let us now look at mastering our support and resistance. So now being able to forecast future significant areas, this is something that's needed, because yes, I know that we look at the market in a 2D perspective, you just see candlesticks 1, 2, 3. But now the way that we want to see things is in a 5D perspective, meaning that whatever that you see, you need to be, with the market, you need to be able to predict future movements. And someone is like, no, you can't predict future movements, it's the market, you can't, it's impossible. It's not, you can predict future movements. Only you can't predict it right each and every time, but you can predict it and you can get it. You can make your predictions be well. Like you can with the weather. It doesn't mean that you're gonna be like today's gonna rain, then boom, today's not gonna rain. If you don't know anything about weather, you won't even know what's going on. But if you're a person that studies the weather, you'd be like today's more likely to rain, and rain can happen even if it doesn't happen. If you say today's more likely to rain, there's a higher chance of you being right because you studied that. Like you can have a higher chance of the probability of the winning side of knowing what's more likely to happen. So that's one thing that we're going to be doing, forecasting future significant points. Now most people, when the price is moving like boom, 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 people would be like looking from here, boom, hey, support. That's why I was able to see a sell here. We don't want that. What we are going to be focusing on is, or what we are actually focusing on, because that's something that we're doing now. What we are focusing on is actually this. Price doing this, yes, like just like that, just like that, just like that, or anyhow. What we are focusing on is what happened here. Okay, can this be moved? What's more likely to happen now? This is where price is at. What's more likely to happen now? That's what we are looking at. Being able to forecast our new future support and resistance significant zones. This is what we are looking for. Remember, when you jump on the chart, you'll be able to see how we will be forecasting this. And the only time that we do this, let me just give you a sneak peek. How I draw my support boxes and stuff. We use boxes for forecasting significant zones. How I draw it is, obviously, if this is a high and maybe this is a low, and like this, whatever week. If this week is a bit more slower, a bit more smaller, I'll show you when we start drawing it on the chart. If this week is a bit more bigger, then it means that this box and this one here is not going to be the same. This one here, there's a higher rejection. Why is there a higher rejection? This one here, there's a smaller rejection. Why is there smaller rejection? Does it mean that our support is going to hold? Does it mean that our support is not going to hold? What does this one here mean? Does it mean that there's a high chance of rejecting here once more? We're going to be seeing that when we start doing back testing, when we implement some of the things that we would have seen, and when we apply everything that we see in order to come up with future movements. So that's something that we're going to be looking at, mastering our significant areas, and now also mastering our candlesticks and mastering the mathematics. Remember, guys, just because you're looking at the 5 minute doesn't mean that it's done. There's what we call the 7 minute time frame. There's what we call the 12 minute time frame. There's what we call the 2 hour time frame. I'm sure you guys are not even paying attention to the 2 hour time frame, on which this is the mathematics of candlesticks. You don't have to know mathematics. It's literally what it is. When the 1 hour, it's the 1 hour plus the 1 hour, like, to get the 2 hours. So even if the 1 hour is bearish, this one here, the other 1 hour is bullish. You take the open, the close, the open, the close, then you're able to formulate what the 2 hours is saying. And with the 2 hour, you'd be able to now make a feature. Like this one is actually going to help us on the next lessons that's going to come, which is the trade management. I wanted to add it here. I was like, you know what, let me just break down the strategy for you guys before, you know, talking about trade management, because I was excited with how this is actually going to be applied. But with this one here, already when you're in a trade, you take a trade, let's say 5 minutes, you're in a trade, 5 minutes executed, and then it shoots up. Just because it shot up, you have to start looking at, now when you add these 5-minute candlesticks, when it builds up to a 20-minute candlestick, what do you see? Do you still see more future movements to the upside, or do you still, is there some sort of resistance there? What should you do? How should you manage the trade? Which is a lesson for the next one. But guys, this is what we are going to be, this is what you have to master. So now remember, everything here is a strategy, man. Everything here, and you're like, how? Everything here is everything that you have to master is a strategy. Remember, we taught you a lot of things, ne? Strategy. We have taught you a lot of things. We taught you a lot of things in this. There's a lot of things that you have. It's a lot of knowledge that you have been able to acquire, ne? But now, what I'm saying here is that you have to now focus on narrowing down that knowledge. You have to focus on what is it that you have to know in order to master this thing. You can know that a car drives, you can know that a car, you know, when you put the ignition on, but when you drive a specific car, now it's going to be different. The driving experience is going to be different. You have to know how to handle that specific car. You have to know how to be able to, you know, drive that specific, it's different. You don't have to outlearn knowing how to drive cars and stuff, but you have to now focus on specific things with this specific car. So these things are the things that we have to master in order to get our strategy perfectly. So now guys, I think it's the right time for us to jump onto the charts and see what actually is, you know, what is the one thing that I've been trying to show you guys.